morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandai. While Indian equity markets set for a cautious start post previous session shake-off, PSUs and mid-caps are expected to be in focus. MSCI Feb review, 5 additions to the India Standard Index, key changes in small cap index too. Let's talk about the setup now. GIFT Nifty indicates a positive start for Indian equities, up with gains to an extent of more than 0.25%, and Dow. Actually, talk about the US market. Dow Jones has hit a fresh record as stock closed mixed before key inflation update, where investors prepare for the first key inflation update of the year and the next wave of earnings report. Talk about Asian markets. They wedged in higher before CPI data. Nikkei skyrockets on tech strength. Back home, economy gets twin boost. IIP growth increased in December after falling to an 8-month low in November. Retail inflation drops to 3-month low in Jan. FII, let's talk about the trend there. They've bought in shares to an extent of 126 odd crore, and DIIs, they've purchased equities to an extent of 1,700 odd crore. Let's talk about earnings that you need to watch out for. A total of 564 companies will be reporting in their December quarter earnings today, and this includes the like of Eicher Motors, Hindalco, Zee Entertainment, importantly, IRCTC, BHEL, and bunch of other names. Also do bear in mind the fact that Nalco will be reporting in the numbers. Thus far, the company has reported in a good run that we're witnessing across the metal pack, and Nalco is no exception. So some sort of solace, or rather just say, the fundamentals matching up to the price action will be watched out for in this quarter. Also, MediAssist Healthcare Services, the newly listed kid, will be coming out with a report card. So that is also something that you need to watch out for. In terms of MSCI review, 5 addition to India Standard Index. This includes NMDC, GMR, Union Bank, BHAL, and Punjab National Bank, which have entered the MSCI Global Standard Index according to its Feb 2024 quarterly review. Analysts had expected the 4 PSU names to be added to the list. GMR Airports, of course, is a surprise addition to that list. But that's that when it comes to the entire trade setup. Let's also talk about the stock under F&O ban. The NSE has added in Aditya Birla Fashion and Retail. Bandhan Bank also is added to the F&O ban list on Feb 13. What has been retained is Ashok Leyland, Aurobindo Pharma, Balrampur Chini, Biocon, and Delta Corp, importantly. And these are the additions that we're looking at, along with SAIL and Zee Entertainment too. Now, do bear in mind the fact that SAIL has already reported in the numbers and Zee Entertainment will be reporting in the numbers, but not maximum price action is expected to be there because it's already added to that F&O list. UPL, however, has been removed from the said list, but that's that. Today is going to be real acid test for the markets. Couple of things actually, you need 3 important things to track today. Bank Nifty closed exactly at 200 days DMA. Nifty closed below 20 DMA. PSUs, there is a strong number from Coal India and SAIL. As expected, some PSUs are included in the MSCI index. If Coal India and SAIL fails to rally, that will be a big negative to the whole PSU narrative, which has not been auguring well thus far. But that's that when it comes to the setup that you like to watch out for. Importantly, let's now connect to the technical guest of our show, Ajit Mishra, SVP-Technical Research. Morning there, Ajit.
Yeah, good morning, Nickey.
All right, how is the trade setup looking to you? A bit of pressure that came in the previous session. Of course, much of the drag, and I think a reality check came in for the PSU names. Do you think there is a change of narrative there, or it's just a temporary blip to the otherwise a fueling rally that we're looking at for the counters?
So, Nickey, when it comes to PSUs, mid-caps, small caps, we have had phenomenal surge that we have never seen before, 4 times, 5 times of the price move that we've seen last 6-7 months. So it's natural that they may take a breather, consolidate, and it's too early to say whether the trend has reversed completely. But as a trader, if you are holding these names, definitely you should reduce your position because charts are indicating in case if there will be any further profit taking, it could be in the range of 10 to 15% from the current levels also. So especially in the PSU's name is something that we recommend to reduce position. Mid-cap, small cap, again, we need to be selective. Both the indices in yesterday's session underperformed. They both slept below the short-term averages. They have done it before also, but the kind of candle that we had yesterday means the kind of move, 4% kind of a cut. It's not normal. And plus, since the overbought readings are there, we feel that in mid cap and small cap too, one should reduce the position. So I feel that more of like, large cap names, especially from the IT, pharma, and selectively from the metal and auto space is something that one should focus on if they are planning any long trades.
All right, let's address in the market open. Thankfully, there is a bit of solace that we're witnessing. Of course, it's going to be the entire day. We're going to be watchful of what really plays out for the PSU names. But at least at the start of it, it is a good start. Let's just say a moderately decent start coming in for Nifty 50, 21,650, holding about that. Also, let's talk about the BSE advances and declines. Advances, market breadth right now is evenly distributed between the advances and the declines. And if you talk about the bank index, that also is faring decent. 0.2% clocked in early deals for Bank Nifty. Mid-cap index, a bit of momentum loss there. Typically, we saw that in previous session too, right? A bit of sell-off, rather a sharp sell-off which came in. That brings you to the question. Yesterday's sharp sell-off in mid-cap and small-cap and PSU bank was more a retail or an HNI strategy or a shift from these particular counters now to the large-cap names. Look at the PSU bank right now. It's trading higher with gains to an extent of 0.5% thereabouts. Let's also talk about the other sectoral indices that we have. Nifty IT and the Pharma. These are the only two space which right now are holding well. For the course of the month thus far, they've actually added on 4% of gains. In today's session, Pharma is trading flat with a bit of negative bias, but otherwise, for month-to-date basis, you would see good traction building in for both of them. Metal also takes it to the chin, I guess, a bit of hard hitting there. Nifty Metal is down and out with losses to an extent of 2.5 thereabouts. And Nifty Auto right now is trading with gains of around more than 0.3%. Let's talk about the top gainers and the top losers there, just to see where the momentum is stacking up, essentially. While Coal India, thankfully, they're the rally, Hero MotoCorp, NTPC. Well, these are some of the top gainers that we have on the list. Tata Consumer Products, M&M, ICICI Bank. These are some of the other top gainers that we have overall. Talk about Eicher Motors, Wipro also auguring fairly well. Talk about the top losers now. They're on your list. Well, Hindalco, JSW Steel, Power Grid. These are some of the top losers. Do bear in mind the fact Hindalco will be coming out with numbers today. Ultratech Cement, Grasim and Bharti Airtel. Well, these are the top losers. Surprising, Hindalco is going to be reporting in the numbers today and is one of the top losers. But there on the flip side, you actually have a bit of dichotomy between the metal names too. Tata Steel, JSW Steel are actually trading on the lower side of it. Also, Hindalco on the flip side, you have Coal India, which is reported in good set of numbers along with SAIL. Let's pull that up and then go to Ajit to check with him what does he make out of this start. But let's pull up Stocks and News Coal India numbers first, where the revenue is up by 2.8%. The numbers have come in at 36,154 crore as compared to an estimate of around 36,651 crore. EBITDA, that's higher by as much as 10% nearly around that level, 11,373 crore. The street, that's where the beat is essentially coming from. The street was working with an estimate of number of 9,800 and here the number is around 11,300. Margins have also shot up to 31.5% as compared to 29.53% and net profitability is up as much as 18%. Let's also talk about SAIL, a bit of traction that you can see on the screen. SAIL right now, if you look at that one, well, revenue is down by 7% nearly for SAIL and EBITDA also a bit of flat performance coming in on that one. Margins have expanded to 9% as compared to 8.3%. Net profitability, however, has taken that hit, a bit of downtick there, 5% lost in SAIL. Ajit, coming back to you, what do you make out of the start and essentially the two metal names, Coal India and SAIL? a complete dichotomy which is witnessed within the metal space right now. What do you like, and what's your suggestion for SAIL and Coal India typically?
Right, Nickey. So the start seems okay. Means yesterday we have tested the retested the long-term averages in the banking index, and that's why there could be a bit of a beater from that front, which is the major dragger for the markets. And the other names also we are seeing mixed trend, like the auto counters are holding well. We are seeing recovery in select pharma names as well. But again, the IT pack is trading mixed. Reliance is one basically which is holding strong. So that is how somehow also helping the index to maintain the gains. But indications are still mixed. So I feel that if you are sitting on the longs, maintaining few short positions and adding to your reducing your positions on every rebound is something that this should be a prudent strategy. Now coming to Coal India and SAIL, the Coal India first, that we have hardly seen any major retracement from the record highs in Coal India, but now I feel it's time that one should book profit if you are holding it from the lower level, and wait for any dip around, let's say 410, 420 to re-enter. SAIL comparatively looks bit weaker, and in fact it has slipped below the short-term averages after a long time. So there's a possibility that we might again retrace towards 110, 108 levels before making any meaningful move. So if you have any position in SAIL, definitely you should exit.
All right. I would also want to talk about Paytm, because that's the one which is apparently in news. And there is a downgrade which has come through from Macquarie today. It talks about the fight for survival, and has downgraded to underperform, transitioning to new banks loan. Look a bit difficult for this one. It's sharply cut the target price to around 275 from 650, driven by a sharp reduction in revenue across various segments, and talks about the recent regulatory changes and diktats. Now, Paytm faces a serious risk of exodus of customers put together, which significantly will weigh down on the monetization as well as its business model. But on the charts, how does it look?
So Paytm, Nickey, it's trading at its record lows. Made a new low today, and we have been recommending this to our clients to stay away until we see the clarity emerging over the possible course of the action. And charts are also in sync with the trend that we are not seeing any sign of respite. And though the volume have dried in the recent 3-4 days of decline, but we feel that until we see some sign of reversal, a decisive reversal, one should refrain from any long position. In fact, in case you have any long trades, existing long trades, so you should definitely exit and strictly avoid this stock for time being.
All right. Any top recommendation from you, Ajit, for today?
Yeah, so considering the market tone, one should maintain positions on both sides. So from the pharma space, Oro Pharma, we have seen decent retracement, and we expect some rebound now after retesting or forming a base around the short-term averages. 1065 is what we are eyeing in Oro Pharma with the stop at 995. And Bandhan Bank, though it's in F&O ban, so in case if you have any existing position, you should definitely exit, because it's the biggest counter within the banking space, and 185 is what we are eyeing. So for the existing position, your stop should be at 210.
All right. We'll leave it at that. And thank you so much for taking the time and having this conversation right here with us. All right. Too many questions to be asked, much of the ground rather to be covered. And let's bring in Prakash, Diwan, the market expert, without any further ado here. Morning there. How are you doing?
All good, all good. Thank you, Nickey, for having me on the show.
Pleasure is all mine. Yesterday was a sharp sell-off in the mid-cap and the small-cap and the PSU pack, right? The real question was, where was this essentially coming in from? Whether it was the retail, where it was an HNI, or is it like a shift from this space now to larger cap names? How do you read into it? What's your assessment?
Yeah, that's probably a question that's on top of the mind for most investors. It's just about a week back that we were all hailing the PSU performance and the rally that we've seen. But, interestingly, this run-up in most of the PSUs in the last 3 months has been so significantly sharp that markets always tend to create equilibrium through these kind of moves. Now, I don't know whether it's HNIs who sold or retail who sold. I doubt if it's retail as yet because people are still buying. The FOMO is still manifesting in, the kind of messages going around on PSUs and all. But we know is that it's possibly not the DIIs who have sold or the FIs who probably sold because they really don't hold such significant positions in most of these counters. Now, these stocks have also there's a very clear differentiation that's happening, Nickey. I mean, you look at the numbers from Coal India and you look at the numbers from, let's say, an SVGNL. It's so simple, HGVNL or whichever, sorry. The difference is that a lot of the, move in some of these PSU stocks has been on order books, on the kind of potential that they have, the kind of flow of news that's come through. There's a lot of hope trade built in that. Whereas markets only reward performances. And end of the day, market is a slave to the earnings. And if earnings do not justify these kind of sharp increase in valuations, you are bound to see some of this. And it's good for the market. It's good because it makes it healthier. It makes things a bit real. And from that perspective, some of these pockets of exuberance will see a little bit of this thing. So, but there's very clear sector rotation as well, Nickey. That's evident in the market. While the PSU stocks have succumbed to some profit booking, which was warranted, there are other pockets where probably there is a lot of money moving in, and that's what the DII FI numbers tell you. Both of them were positive. So, which usually doesn't happen when markets have lost some ground. So, yeah, it's interesting in terms of, the composition of what's happening in the market. And I think it'll continue. The volatility is here to stay. We'll have to brace up for this month to be fairly volatile till the expiry.
Sure. What really I think was important in today's session also was earnings of two important PSUs, essentially. Coal India, which reported good set of numbers. We saw that operational margin performance beat which has come through, and the stock perhaps reacting a bit to that. And SAIL on the other side, which rather reported lackluster numbers, and the stock right now in the opening setup was down and out with losses to an extent of 5% odd. So the hit seems harder as compared to the gains that otherwise these stocks could muster in. Within the PSU space, what do you like now? Is there valuation comfort that you draw out of it?
So, I think even while some of these stocks have done about 50% in the last 3 months, and they've lost about 10-15% in the last 3 days, net, they probably still have been making value, provided, people have entered when the belief in PSUs had just kind of begun to crystallize sometime around November, post-Diwali and all. But my sense is within the PSUs, if you look at the banks, of course, it's an altogether separate category in that sense from a behavioral perspective. But banks within the PSUs is something probably safer at this point in time as compared to defense or railways or some of those pockets where execution takes much longer. What happens with banks is that the benefits are immediate. They are fairly correlated to the economic growth. I mean, the data that we saw yesterday evening come through once on IIP, for example, or core inflation coming down. Those are very positive this thing for the economy. And as soon as that kind of starts translating into numbers going forward, you'll probably see the banks benefit faster than some of the long-range operational businesses or segments like railways and defense, right? So I believe there's still opportunity in the banks. You could look at some of the banks that are fairly valued or have the potential to get re-rated or continue getting re-rated. Canara Bank, for instance, is one of the top picks that I feel needs to kind of be looked at differently, where SBI has stolen the limelight at the cost of the BOBs and Canara Banks of the world. But you'll probably have someday some realization coming in that, and you'll probably have some buy calls come through and all of that. But by and large, PSUs as a whole will see a little bit of a slowing down in terms of the stock prices, which is good. The consolidation is required, and I hope they go through a time correction more than a price correction, because at least that will not destroy too much of wealth. And the other pockets that look very promising, and non-PSUs, I'm deviating from your specific question on PSUs, but just want to leave you with this thought that there are pockets within Pharma which are looking very promising. IT could make some sort of a safe haven bet, but I'm not of the belief that IT could perform very well on an organic basis. but the behavior that TCS and all are demonstrating does tell you that there's money coming in there. But pharma is definitely something which people should look for. 2024 could be a year where pharma does what reality did last year. So, it's something on those lines. There's a rotation that's probably favoring that.
That's a brilliant point made there. Pharma can do what reality did in the previous year. With that in mind, what kind of stocks can one look at? Aurobindo Pharma, does that make it to your list given the kind of valuation support? Or which are the stocks that you're looking at?
So, interestingly, pharma is a fairly large basket. While if you see the representation within the key indices, whether it's the Nifty or the Sensex or the Junior Nifty also is very meager. So it's bound to kind of start inching up. And normally these shifts are very gradual. So what's going to happen is you will have probably the bigger ones have started doing well. Look at where Sun Pharma is in the last 3 months in terms of performance. Look at where Lupin is for the last 4-5 months. Look at how Cipla is holding so steady. My sense is, as I said, the pharma pack is so wide, so vast that you'll probably have enough bottom-up opportunities emerge out there. Aurobindo Pharma, while the valuations could probably be soft, but there's a reason to that. They've always been clouded with a lot of news flow, which at times is not very gracious. And I would believe it's better to be in a boring, steady state growth trajectory kind of a company rather than Aurobindo, which has these spurts and bursts of energy. So from a valuation perspective, there are lots that are available at lower than their median averages on the price to earnings multiples, or even from EV by EBITDA kind of a multiple. So there is enough, but Aurobindo Pharma at this point, to my understanding, doesn't make the grade.
All right. You made a very interesting point, both IT and pharma. Of course, you were more in the favor of pharma. So for IT, what is the narrative? I mean, what is the fundamental that you're looking into? Do you think it's just reversal to mean, or you think it's just temporary performance since there is no place to hide? So probably IT is at rescue. How are you looking at it essentially?
No, that's an interesting question, Nickey. So what is it that's probably sparking the interest, or potentially can spark the interest in IT? And if you look, going forward, whatever is happening within India in terms of election outcomes and the pre-election build-up and, all those, and maybe the budget in July, when it comes, you really don't know which sectors could be in and out of favor. IT remains resilient from that perspective. And what's happening is that IT is probably seeing a little bit of a bottoming out in terms of valuations. I mean, look at where TCS is today. It's at recent highs, but it's still not overvalued, right? From what it used to be, let's say just about 2 years back, post the pandemic recovery. IT, some of these small, and I remember we discussed some of the smaller names like Persistent and Cognizant, and not Cognizant, but Cyient and, OFSS, KPIT. So all of them have been chugging along with some sort of a growth coming back in certain pockets. BFSI being largely responsible for both the downside and the upside has started showing some sort of green shoots. And the other factor that you need to overlay on this is within the US, the talk is not about recession anymore. The talk is not about how hard things could get in terms of the landing and all of that. It's more about when do the interest rate cuts begin. Now, there's debate whether it's going to be April or whether it's going to be even later. So all of that is changed. The entire dynamics of the market have changed in favor of things looking up. And this whole bogey of AI, which why I'm calling it a bogey is because AI has been around for ages. It's not that we haven't seen AI, but AI started getting crystallized as a growth engine of the future, and just because ChatGPT made it generative. So, that is something which had taken the eyes off the bread and butter digitalization business, which most Indian companies are into. And if that is to continue getting pace from the larger sectors contributing to this, whether it's ENRD or it's BFSI, travel, all of those things, I don't see any reason why some of these these IT names may not see some sort of a pullback. But it's yet to happen. The numbers haven't yet. The new contract wins haven't been announced with that ferocity in the US. It will probably still take some time, and we might lose this quarter. But next year, things could probably be different. So we'll wait for the commentary. I'm never in a hurry to buy a stock or buy a sector just because, there's a little bit of a promise. You need to see certain things on the ground to make that happen. But it's worth looking at from a slightly longer term perspective. But the other sector that you could look at in a very similar situation, Nickey, is chemicals. I mean, you saw the commentary from Aarti industry. It was, while they do accept the fact that this quarter gone by December end wasn't great, there's this lots that's happening which builds a little bit of confidence. So if the market is in a mood to punish and sell off stocks that have done well, stocks like Aarti which have not done too well and are still seeing a little bit of a cool off are probably good entry points. So those are things that you need to look at. Take your eyes off the noise, which is right now PSUs, and start focusing on something which people are not yet looking out for. So that's the way to kind of seek value, I think. And it's conventional, it's boring, but usually it pays off.
Yeah, that's also the word, right? Conventional and boring business is the place where you make most of the money, right? But railway PSUs, coming back to the noise, because I think much of the damage has been already done around that. Railway PSU stocks are in free fall. IRCTC, RVNL down almost 30% from the year's high. Most of the analyst community suggests it's because of the execution not keeping up with the growth expectation, fears of slowdown in the order inflow ahead of the Lok Sabha election. How are you viewing it? Do you think it's a good time to lap up these stocks essentially ahead of the elections? Any view on that?
So, the fall that we've seen, the cool off that we've seen in railway PSUs is probably yet to get completely consummated. It's just begun. It could kind of continue to another 20-25% in some of the names. I mean, it's a very broad, generic band that I'm talking about. But what I'm trying to look at is what's the change and mood that's happening around these stocks. The order book is the same. The execution has always been the way it is. There's nothing that's radically changed. In fact, it might have marginally improved in the last few years. Once the July budget is out, you'll probably see some more direction in terms of the kind of ability of the government to spend or continue spending on some of these marquee projects like Kavach in the railways or new track laying in terms of, what IRCON and rights benefit from. And, all of those things will start showing some visibility. Right now, with the order books in hand and the execution the way it is, I think most of them have a PE expansion that's happened in the last 6 months. And that's exactly what's normalizing. The PEs had gone up to 40, 50 times, and they'll probably come back to the band of 25, 30. So I would look at it not from a price correction perspective necessarily, but if the PE bands implicitly come down, that's when, you start feeling that, okay, you're pricing in growth for the next few years. And the same is with power sector names, whether it's the power grids and BHELs of the world and all of that, because all of that will continue. There's no stoppage of business for these companies. But it's the question of how much do you want to pay for it, for the growth ahead of you. And from that perspective, I think look for multiple rationalization, which was the culprit in terms of, this bubble kind of a behavior which happened. Everybody wanting to go through the same door. Naturally, you will see a little bit of that stampede, and now the stampede is reversing. So all of that will happen. But good thing is the fresh money that you see in the market through SIPs or through small cap fund inflows, all of that will be able to put a backstop to some of these names. They won't have these free fall kind of a behavior which we've seen in the past. So I must tell you that we keep assuring investors and clients that don't panic. This correction is healthy. There's a little bit of froth that gets sorted out. Let that settle. The market's not going to stop tomorrow. It's just that you will be able to buy at better levels. You don't have to compulsorily buy just on the first day of the fall. That's the rule.
Okay, so which 3 top stocks do you think are now valuable bet given the kind of correction that we've already seen? What do you think would be value buy here?
So as I'm saying, the thesis is that we'll still wait for the correction to deepen. I'm not in a hurry to buy, but let me put out those names that if that correction happens, what is it that you could look at? So from a structural perspective, I still feel power is something which is very promising. Within that, the kind of renewable energy, the conventional energy generation that is evident, and that's why you have the PFCs, RECs, or the IREDAs of the world doing well. You will need a lot of transmission, and that hasn't happened much. There's not much of a growth in the transmission ability that we have, and most of the time it's a few large private sector players, but largely the onus is on the government. And I think the government will continue to spend on that. So from that perspective, a power grid corporation is still something I would look at lower levels. On the railway side, if everything goes off well, of course, I have never understood why an IRFC can get valued so richly in terms of price to book multiples, which is a very simple business, very visible in terms of earnings and all of that, but it was overvalued. So there could be some takers for that at lower valuations. So if the price to book comes in the band of about 3.5, 4, it'll probably start getting a bit lookable. And the last pocket, which I must tell you, is the infrastructure growth that we are seeing on defense. The development that we are seeing on defense is something which has taken away the sheen from some of the other names within the private sector as well, right? So just because the PSUs have made money, the focus is on the recency bias led businesses. I would believe you have the likes of Tata Power and all, and there are lots of downgrades that make things easier, because these downgrades are from people who had set very high expectations. If you really ask me, Tata Power is done as promised. They'll continue to do as well. So from that 400, it's just moved, I don't know how much it is now, but it's probably lost about 15%. But it's something which very easily can start doing well once the deleveraging thing happens. So you'll have to look for businesses that have reported weak numbers and have got punished. And if the numbers are weak because of one-off situations or something which can change for the better, you just have to go ahead and buy those. So that's the simple thesis. Don't get disappointed with falling prices. See if that's very well correlated to long-term performance issues, or it's just this quarter that's weak. So, the market is in that mood where this quarter could be punished, the stock would be punished for this quarter, but not necessarily for the next year.
Right, Prakash, thank you for those recommendations and views. We're just going to leave it at that. Thank you so much for taking on the time and having this conversation.
My pleasure, Nick.
Right, I wanted to take a moment to express my sincere gratitude to the wonderful team and our loyal viewers for helping us get opening bell off the ground with such huge traction. Your support has been instrumental in the journey, and grateful for every moment that we've shared together. It marks a year of me actually taking over the show, and it's been quite a ride, I must say, but immense amount of gratitude to my team who has made this product the way it is for us. But with this, it's a wrap, and goodbye from the entire team who puts this piece together for you. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.